Let's get someone onto the show and see if they can help us make sense of the pain that everyone has been feeling over the past couple of days. Mr. Steven Fiorillo. Steve, how are you?
Great. How are you?
I'm doing very good. Thank you for joining us on the show today.
Why are you saying pain?
Well, based on the comments I'm seeing, a lot of people are upset that Nvidia is down 9%.
It's going to get bought up tomorrow.
All right. Give me your thoughts, Steve. What are you thinking about this thing? Like, why is it down 9%? And do you think the market's being stupid here?
Look, I think I have a lot of thoughts right now. I haven't seen anything. I've been tied up all day. But, I'm looking at the numbers, and anybody who thinks it's at 120.
It was at 119, bro.
What is wrong with people? So this is where I start to get annoyed because people, I'm going to choose my words very carefully here. People at this point are looking for a reason to be bearish on Nvidia, and they're looking for the littlest things to look into what Jensen said on the conference call. This is ridiculous. I'm going to share my screen. Let's actually look at these numbers. And once again, there is no reason to be bearish on this. Jensen confirmed on the conference call that all the CapEx spend that the big four are doing and everyone else is doing is happening. He confirmed that margins are going to expand in the second half of the year, and they're coming out with a new chip in the second half of the year. So why people are bearish, there's no reason to be. And Nvidia is now the cheapest it's been in God knows how long. It is not on the right screen. Hold on.
By the way, I shared your Google Sheet with everyone in the morning, and it was great looking at the EPS estimates.
We're going to look at it a different way, though. So why is it fucking doing that? Why won't it let me go to the other tab? Let me close that one. So technology sometimes. Maybe Jen can fix that. All right. So before I tell you what companies these are, there was a little company called Nvidia that last night reported, and basically, and I can, even though it says January 2025 because they don't report on a calendar year, this is really their 2024 fiscal year because they only did 1 month in 2025. So I just named the stuff the same. But they just put up 130 billion in revenue. Okay. A 53% year-over-year increase in revenue on an annual basis. I'm not looking at quarterly numbers, just straight annual numbers, because I know 144% sounds a lot better in Q4 than 53% on an annualized basis. But really look at this. They generate an additional $70 billion in revenue this year. And then on gross profit, they generated another $53.5 billion in gross profit this year. Gross profit grew by 55%. Then profitability, net income, they generated an additional 43 billion year over year, grew net income, bottom line profit by almost 60%, generated almost $73 billion in net income, more than $1 billion a week, and people want to be bearish. They expanded margins. Profit margin last year was 49%. This year was almost 56%. Gross profit, it was almost 73% last year. This year was 75%. So you have margin expansion. You have phenomenal growth. And, they're not doing triple digit growth? Great. They were already a $61 billion revenue company. You're not going to do triple digit growth when you're that big of a company. But they did over 50%. And then we have a little company that your followers are familiar with. They went haywire after earnings. And their year-over-year growth was a measly $640 million.
Wait, what company is that for everybody?
And in less than 23% year-over-year. So you have company A, which is Nvidia, that slaughters the market and goes down. And then company B that generates not even 23% top line year over year growth, and goes haywire to all-time highs at valuations that are more than 100 times sales. And across the board, there is nothing about that company that beat Nvidia. You start looking at, and I could care less about gross profit margins because that's only your cost of sales. You have to look at bottom line margins because that takes into consideration all your operating costs, your taxes, everything. Their profit margin was not even 20%. So Nvidia is operating at 130 billion revenue, operating at almost a 56% profit margin, and people want to nitpick over a sentence here and the way Jensen said something there. Good. I hope it goes to 100. I hope it goes to 90 so I can just buy. I will sell so much stuff if it goes to 100 and go on a buying spree and just sit there for the next year until this turns around, because this is insane. Go back. So look at, I added Palantir, I added Coca-Cola in here. So you said you would show this, but look at Nvidia right now. Nvidia is trading at 27 times this year's earnings and under 20 times 2027 earnings. Okay. It is trading lower than Coca-Cola. So you're trying to tell me that people are willing to spend 45.5 PE on 2027 earnings on Costco? What is wrong with people? Seriously, what is wrong with people?
No. Can you answer the question? Why are people spending on Costco or Nvidia? Like, what is your interpretation?
So, like I said to you last night on the phone, people think that Costco is a recession-proof company because everybody has to buy food and toiletries. I got news for everybody. The Mag 7 minus Tesla, because Tesla does not count, are inflationary, recession-proof, because their balance sheets are so insane that they can weather any storm. And this is, I hope Nvidia keeps going down because I'm just going to buy more. This is crazy to be bearish. And I think people just bought a lot of puts and as protection. And I think that's what it was. I don't think it was anything else, because you can't in your right mind tell me that you would rather pay 46 times earnings for Costco than less than 20 times earnings for Nvidia. You just can't. It makes no sense, especially when Nvidia has over 40% EPS growth from the close of 2025 to the close of 2027, and Costco has 23.5%. Like, there is no logical explanation about that. Not to mention, Costco's profit is about 12 billion or so. Let me pull the exact number because it is a fraction. So not only are you paying a much higher multiple, you're talking about a company that has a 2% profit margin and they do $7.6 billion in profit. Nvidia does more profit than freaking Costco in 6 weeks. And people want to pay 46 times earnings for Costco. That's what's wrong with the market. We are giving, and this is why I get annoyed with investing a lot, because everything is not just numbers. And I get it. You got to put other variables in there. But this is exactly why stuff like Palantir trading at 120 makes 0 cents. 0 cents. I mean, okay, cool. People want to pay 89 times Palantir's earnings right now and 151 times this year's earnings when your year-over-year growth was 23%. Like, really?
So here's a question. If the market thinks Costco is recession-proof, even if they're wrong.
It is recession-proof, but so are these other companies.
So then do you think the market is genuinely scared of the R word becoming true?
I mean, look, a recession is inevitable. Whether it happens in 2 quarters, 2 years, 5 years, 10 years, at some point, it's inevitable. I don't know when it's going to happen, but we don't have negative GDP growth.
No, we don't. We had 2.3% today.
So it may not be what it was, but it's not negative.
Okay, so why do you think the market is not believing in Nvidia's growth story? Because down 10% to me means that they don't think it's going to continue, right?
I think all the sellers that really wanted to get out got out after the DeepSeek crash. I don't think that this is real sellers. I think that this is just people doing puts, and I think that this is people that are just trading at this point. This isn't people investing.
So algos.
Yes.
Are you drinking milk?
Yogurt. Blueberry pomegranate. Why?
No, it's a horrible day in the market, and you're drinking some blueberry yogurt. That's all. I find it intriguing.
Yeah, it's from the farm. Drinkable yogurt, blueberry pomegranate. It's delicious.
What the hell's going on with Google? Why is Google down?
Once again, people are acting like this is gonna go out of style somehow. Got news for everybody. Ask anybody that's running a small business or a large business. I'm sure everybody in your chat knows somebody that either owns a business or is in operations in a business. Ask them where they advertise. There's only two places to advertise: Meta and Alphabet. That's it.
By the way, did you get your yogurt from Costco or no?
No, it's from the farm.
Oh, okay. Just someone asked in the chat. I blame Tanner for this Costco tirade, because once Tanner made you join SoFi Weekly and you turned it into Costco Weekly, you developed an obsession with why people are spending this much on Costco. And
yeah, it's stupid.
Yeah, now
they don't even have a dividend that's a percent. If you're going to pay me 3 or 4% to hang out in Costco, I'll hang out in Costco. But you're not even paying me a percent on the dividend?
Okay, so here's another question. When does the Nvidia bubble pop, in your opinion?
It's not a bubble.
No, as in when does Nvidia have that quarter where they're like, hey, we're not growing anymore?
I don't think it's coming for a year and a half or 2 years.
Okay, so you think it's 2 years. So here's my question. If you think it's only 24 months away, which is not that far, do you think the market...
Far. 8 quarters.
It's far, but do you think the market's already trying to price in that lack of...
I don't know how you can price them when their EPS is still growing. And once again, they don't even need to grow top line to grow EPS. They can just pull an Apple and buy back 50 to 100 billion worth of shares every year. They certainly make enough money to do that.
Yeah.
Yeah, Tanner shook. He texted me yesterday. Do you want to talk Nvidia? I'm like, sure. 9:30. He's like, never mind. Like, okay. He shook at being awake. I don't know. He shook.
Oh my gosh. Tanner, you gotta join a phone call with me and Steve. You'll get the Steve after hours and really see how he feels about the market.
I just think that this market is getting a little ridiculous with things because people want to come up with reasons why they should buy AMD. And look, I will admit I'm biased. Okay. I got into a very bad thing with AMD. I was down a significant amount of money for years. And then the second it came back, I sold and it just never went back down. But be that as it may, whenever people look for reasons to buy the second, third, or fourth best company, instead of just buying the best company in a sector that's still growing, probably not the best move.
Yeah, I think that's always been the bear case on AMD as well.
And AMD is a great company, but they're not competition for Nvidia. And the inference training, I'm pretty sure that what I heard last night was when AI needs to think and doesn't have the answer up front, it takes 10 times the compute.
Yeah.
And that's where we're going. Like, we're going into an era where the inference training is going to be massive. This CapEx spend could keep going. And remember, we're going from around 188 or something like that billion in CapEx to 320 billion CapEx this year. Okay. Microsoft ends their annual year at the end of June. They have to come out in the summer conference call in August and release their next fiscal year guidance, which is when you're going to get the big CapEx spend. They're probably not taking their foot off the gas. And Microsoft's going to be the bellwether for this because they start their fiscal year in the middle of the year instead of the end of the year. So you're going to have Alphabet halfway through the cycle, Meta and Amazon halfway through the cycle. If Jassy still has another 50 billion to spend in CapEx in Q3 and Q4, Microsoft is not taking their foot off the gas and stopping halfway through the year and announcing, oh, we're going to scale back to 50 billion.
And Jassy said yesterday he wants to spend more.
Of course. The demand is going to be insane. With this cycle may be longer. I'm being very conservative when I say 1.5 to 2 years.
Yeah.
Very conservative. If you look at a company like Micron, okay, MU, and you look at their revenue, that is becoming very cyclical. And I think you're going to have a boom this year in certain things, including Micron, because of sunsetting Windows 10. But that's also a company that still generates a lot of money, even in maintenance cycles on revenue. You know, even when this becomes maintenance and not full-scale growth, Nvidia is still going to be making a lot of money. And let's not forget the power of buybacks.
Well, also, hold on. We got this piece of news just now. Meta plans to debut a standalone Meta AI app in Q2. So you got Meta that's going to get ready to compete with Gemini and GPT. They're going to need more GPUs as well.
Nvidia bought back 40 billion worth of shares this year. They bought back 12.5 billion the year before. They're probably going to buy back 60 or 70 billion this year. So not only are they growing their top and bottom line organically, they're going to buy back shares and blow past estimates. And I think people were so used to having jaw-dropping quarters of growth that a beat of 4 or 5 cents and 2 billion wasn't anything that they got excited about because it wasn't a jaw-dropping blowout quarter. But that's the problem. They're looking at the headline. They're not looking at the actual numbers. When you look at the sheer size, generating $70 billion more in revenue in 1 year, that's more revenue than probably half the companies generating a year from the S&P 500, if not more.
Yeah, of course.
And they grew their revenue by that much in a year.
Okay, so your thesis then on this is sentiment is just bad. And that is why we are seeing a sell-off here. Because I don't see any fundamental reason you're pointing to at all.
Sometimes good news is good news.
Yeah.
Sometimes you don't have to look for a needle in a haystack and try to be smart.
You mean a hay in a needle stack?
A needle in a haystack.
No, it's hay in a needle stack. You're saying it wrong.
No, Amit. It's a needle in a haystack.
Steve, we're in front of 3,000 people. Like, say it correctly. It's hay in a needle stack.
You don't have a stack of needles and look for hay in it.
Yeah, no. It's really hard to find one piece of hay in a stack of needles. That's the point of the metaphor.
But you don't have a stack of needles. You have a stack of hay. It's a needle. Anyway.
The chat says I'm right. I don't know what to tell you.
No.
But anyway.
Once again, no.
Okay, so SMCI, are you out of it? Did you take your profits? What do you?
No.
Well, your options expired.
What did I tell you? I don't care if I don't make money on it. I'm going to see what it does tomorrow. I don't believe this freaking sell-off today.
But wait, your options expire on Friday, right?
Yeah, tomorrow.
And you're still in the money, so
yeah.
So you're just waiting for it to pump tomorrow if it pumps.
Why sell it now? Who cares?
It's kind of one of those like, all right, fuck it. If I'm down money, I'm down money at this point. I'm going down with the ship.
It is what it is. We'll sell them tomorrow. I don't think that this is going to be something that's sustained tomorrow. I think that everybody's wrong.
I don't think it's sustained in a few weeks from now. I think tomorrow could get ugly, though.
Maybe it gets ugly tomorrow. I really don't care.
I think the inflation reading as well tomorrow, if that's just not as good as the Fed wants it to be, that compounded with the tariff talk, plus the sentiment we have, like things could get nasty for the next couple of days.
Why can't we just look at what these companies are producing, what they're guiding for, and make a decision off of the captains of industry that are telling you what they're going to do?
I agree.
Why do we have to get so crazy over president said this reading came out as this, maybe it's going to do that? Sometimes it doesn't have to be that complicated.
So your take on all the Trump tariff talk is you don't care?
I don't care one bit.
But you don't think it has any impact on?
Of course, it's going to have an impact on people's psychology and what people in the short term. But in the long term, if you're not bullish on these companies in the long term, who cares? Get out. don't invest. I mean, that's the difference between short-term investors and long-term investors. I can sit here and ride something down and not sell, just like I did with Meta. Everybody's freaking out. Sell Meta, sell Meta. No, it's one of the greatest companies. Why would I sell Meta? I bought more under 100. Look where it's at now.
Yeah, I mean, that's another thing. I'm hearing a lot of people that want to get vocal when the market starts crashing because they've had this thesis for 5 years and now it's happening, but they're still invested in the markets. It's like if you're confident a recession's coming, you should be selling everything.
Yeah,
but
look, people can be right for a month or two, but are they going to be right for the long term? Probably not.
Yeah.
And don't forget, just because it goes from December 31st to January 1st, and the market starts recording a new year with plus and minus, does not mean the business cycle stops. You're still in a bullish business cycle. And that's a big thing to remember. I think a lot of people are going to macro trends. Can you go to macro trends and bring up that chart with the S&P on the bar graph year over year? I think people are looking at macro trends, being like, okay, we've had 2 consecutive years of 20% plus. How many times has it done that before? What's the probability of this? Got news for everybody. This is a different macroeconomic environment than any of those other times. You go back to the 80s and the 90s and even the early 2000s, not this one. Go back. No, go macrotrends.com.
Oh, .com.
Scroll down, go to let me see what the first 3 are. Go to market indices.
Oh, this is where it is. Gotcha.
Scroll down and bring up the bar graph right there on the right, bottom right. That one. So people are looking at this and they're like, okay, 23 and 24%. When's the last time you had 2 consecutive years? How many times did you get 2 bad years after that or 1 bad year after that? They're looking at this and they're like, well, the probability is X. And they're trying to make rationales about other things. It doesn't have to be that difficult. The business cycle has not changed. Nothing has changed about the business cycle. And the Fed is still expected to cut 2 times this year. You still have a strong economy. The biggest companies in the world are telling you they're not taking the foot off the gas with spending. You listen to Larry Ellison. If you bring up Q2 transcript for Larry Ellison, he says, I don't want to misquote him, so I'll bring it up. Give me 1 sec. Because I actually want to read it because I don't think people pay attention to Oracle the way that they should.
I think your argument is very fair. I also think in this type of a market where everything has gone up for 2 years, the slightest bit of red scares people. And it's just an elementary way to analyze what's happening. Because you need some red after that much green. Like it's just things are inevitably not going to keep going.
Listen to this. Larry Ellison, Q2 2024. In response to this sharply increasing demand, Oracle is in the process of expanding 66 of our existing cloud data centers and building 100 new cloud data centers. We have to build 100 additional cloud data centers because there are billions of dollars more in contracted demand than we currently can supply. Blah, 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 blah. Even Oracle, which is not baked into anybody's stuff, has to build 100 new data centers.
Yeah.
Like this spend is going to continue to go.
Do you think
Nvidia is the only chip?
Do you think it's retail selling, institutional, or just algos?
I think it's algo. I think when you get something like this, it's algos. I think some people, I mean, you saw the option market. How many people were buying options at 150, 160, 170?
Yeah.
And then how many people had puts? A lot of this is just gambling at this point. You never had option markets like this a couple of years ago.
Also, the percentage of cash in institutional money managers, Bank of America,
makes 0 sense.
Well, it's the lowest it's been in a while. So it's at 3.5%. But money market funds just added 60 billion.
Yeah, and money market funds is close to 7 trillion or just over 7 trillion. It's insane.
Would you feel comfortable having your money in a money market fund versus Nvidia right now?
I mean, I do have money in CDs and money markets, but that's cash that I keep as cash. I don't put all my money in the market. But if you were looking at investment, what I would say is if you took capital that you were planning to invest and were uncomfortable investing at the market here, what I would say is, look, nobody can time the market. But anybody who wanted to do T-bill and chill got destroyed by the market.
Yeah. Yeah.
Cool. You T-bill and chill started at like 3.5%, 4%. Cool. You got into 4%. Maybe you rolled it at the right time, got 5.25%. You still generate less than 10% in 2 years. And the market was up 47, 48%. You got destroyed.
Archer, by the way, guys, down 11% after hours right now. Yeah, no, I agree. I also think names like Archer, which don't have earnings, they're getting hit the hardest because they're speculative right now, and that's okay.
And that's the problem. People are buying these stupid companies instead of buying quality companies.
Why? Why do you think people?
And I don't know anything about Archer, but you just said they have no earnings. So, I mean, I'm just making a generalization. Like, people want to go into speculative stuff to try to get a 10 or 20x, and that's not investing. That's trading.
I agree. Archer to me is not a stupid company, but they don't have earnings. And if you don't have earnings, like who are they getting to buy the stock? Because it's not institutional guys that are buying this.
I don't know. But that's the problem I had with a lot of companies. I had that problem with HIMS, I had that problem with Rocket Lab, I had that problem with Palantir. It's just the fundamentals don't support the crazy spike we had. And then you have quality companies that got taken to the woodshed. Look at Alphabet. There's no reason for Alphabet to be down. None.
Okay, well let me give you some bear cases. Put in the chat if you have any bear cases.
Oh, this will be good.
Okay, so here's my first bear case. By the way, before I give the bear case, Waymo, 200,000 paid rides a week now. So that's a lot more than Tesla when it comes to self-driving paid rides. But here's the first bear case I got today from someone. Grok 3 is so good that people are not going to search on Google anymore.
Can I ask you something?
You could ask whatever you want. Yeah.
How are they getting to Grok
3? They might be typing in Twitter on Google, but that's like, that's not really Google search.
They're still using Google, right?
Sure.
There you go. I just destroyed that bear case.
You didn't destroy it. The point is, if people are using LLM,
I did. You want to know why I did? Because to go to Grok 3, you need a web browser. The most used web browser is Google. And what happens when you go on Google? You see ads. You get engagement. They're able to sell ads. Boom. Next.
That's if you search on Google, like searching for Grok on Twitter.
Who's using Grok on Twitter? People are going to grok.com.
No, I don't even think is there a grok.com?
Yeah, there's a grok.com.
Yeah, there is a grok.com. I've always used it on Twitter.
Oh, no, use grok.com. It's so much better.
Oh, I didn't know you use Grok.
I use all of them. I play with all of them. Have to.
Okay. But is there any argument that LLMs are commoditizing the search landscape at all to you, or no?
You still have to get to them somehow.
Yeah, but even if you get to them through the browser, that doesn't mean they're monetizing you, right? So that argument's not the most convincing.
Once again, people are acting like Alphabet is not going to be a player in this space.
That would be my response, which is that Google has generative AI search overviews, etc., that are.
They have the biggest training model. Think about it. YouTube is the biggest training model at this point for everything, and Google search. So they have the most data. I wouldn't count them out. I think it's silly to count them out.
Okay, so then why do you think the street is upset at them?
I don't know. Because they're a $2.5 trillion company and people aren't seeing the trees through the forest. I mean, I feel like we're back in years ago when people were like, yeah, they'll never be a $1 trillion company. Like, Alphabet is one of the most profitable companies. And I would say the most profitable because Berkshire, the way that they generated their net income this year, I don't think they're going to replicate that next year. Alphabet can easily replicate their net income, but Berkshire generated $106 billion. It's pretty crazy how they did it. But Alphabet generated $101 billion in net income. Like, are we really going to say that a company that's generating $1.9 billion in net income a week, that we're going to say they don't know what they're doing, or they're going to lose to somebody else. They're doing a pretty good job at winning right now.
It's stupid. It is so stupid. I agree with you.
And that's once again where I'm like, I don't like where investing has got, because there are different investments for everybody. And you don't have to invest in big tech. People invest for many different reasons. Some invest for capital appreciation. Some invest for dividend income. Some invest for other reasons. But if you're investing for capital appreciation and you look at these as businesses, the idea of business is to solve a problem, generate revenue, and then turn a profit from solving that problem. Because if you don't solve a problem, that means that you don't have a product or a service that's in demand. And if you don't have that, you're not going to have a clientele. So those are the fundamentals of business. And now we extrapolate that and we look at the businesses that have the largest demand, that are generating the largest amount of revenue, the largest profits, and still growing, and people don't want to buy those businesses for some reason. It doesn't make any sense.
When are you buying the Tesla dip?
Where's
I bought some today, by the way.
And I don't think it's a bad idea. Look, I'm just going to make up a number, okay? 10 grand. You have 10 grand to put into Tesla, and you're saying, I am looking at this for a 10-year time horizon because I think Optimus is going to be huge, and I think full self-driving is going to do something. I sure as hell wouldn't put that 10 grand in today. I would be buying every month or every 2 months, a little here, a little there. I think the Tesla is probably going to continue to go down. I don't know when it's going to stop, but I think it's going to be volatile, and I would definitely scale my way into it. That's how I would be going at Tesla. I don't think there's any problem with buying here as long as you're willing to buy more if it keeps going down.
Do you think Elon is too distracted?
I don't think anybody can ever say that he's too distracted, because this has been Elon's MO his entire public life. He's always worked on multiple things. I think too many people are concerned that he's spending too much time on Doge and being in DC rather than focusing on his companies where he has investors. And I think that that's a challenge. Whether you agree with what he's doing with Doge is irrelevant. The bottom line is he has private and public companies with real shareholders, and the CEO is not there 100% of the time. I think that is the current optics problem that he has.
This time last year, I remember Nvidia was at $60. Market volatility was bad. Nvidia crushed earnings, and then everything started changing. The difference is exact same market volatility. Nvidia crushed earnings, but Nvidia didn't lead the market higher. Nvidia went from 60 to 80 back in 2024 off their earnings. Do you think that's the market saying we're not ready for 2025 to be a compounding year in tech like it was in 2024?
I don't know what the market's scared of at the moment. Nvidia consolidated throughout the last 3 months. It hasn't gone anywhere. It had a great quarter last quarter, face ripper, consolidated, and now it's selling off after this one. It's stupid. It's one of the greatest companies in the world that has no competition and huge demand.
Yeah, that's a fair point.
It's really annoying that this is what investing has come to. Really annoying.
So I imagine you think there's a lot of froth in the market still in these meme coins and stuff that needs to be.
I wouldn't say froth. I just think that there are things that are overvalued and there are things that are undervalued. And the fact that people keep trying to chase things that are overvalued without making a real investment case. You want to chase Palantir and you want to come up with a model that you think that it can get to 10 billion of free cash flow and you're willing to pay a certain price for that over a certain amount of time. I'm not going to debate that with you, because at least you looked at the numbers and you have a thesis of what you think is going to happen. I won't debate that with you. Fine, do it. But if you're not really going through the numbers and understanding how business works and how investing works, I don't know why people would invest in some of these companies they're investing
in. Is Palantir going much lower than this?
Yes.
Why?
It should not be anywhere near 84. Come on.
So where's it going?
You don't want me to answer that.
I need the button where it says I can handle the truth. No, I can handle the truth. What, by the way, what movie is that from?
You did not just say that. You don't even know who said that.
I have a couple guesses. Is it Gladiator?
No. Oh my God.
Wait, hold on, no. It's some Greek shit. It's the guy in the Roman Colosseum.
No, it's right? Not.
Oh no, he says, "Are you not entertained?" Sorry. That's
oh my God.
That's a different one, bro. Oh no, sorry, that's a different one.
Have you never seen A Few Good Men?
No, I don't know what that is. A Few Good Men.
This is why we can't take your TV recommendations of The West Wing seriously.
Oh, this guy, Jack Nicholson, right? Yeah. I haven't seen it, but I've heard of it. You can't handle the truth. Okay, gotcha. All right, so now I know. Now I'll never forget this.
All-time classic movie.
Okay, so where's Pounter going?
Mean.
Yeah, be realistic. Don't be like, be realistic here. Like,
yeah, realistic. If they don't absolutely decimate Q1, this is going under 50.
What is decimate? I think they will decimate Q1 though. I think they're gonna have a good Q1. I don't think that's the question. Like they need to grow 35%, right? Probably. Like, yeah, I think they're gonna do that.
To me, that doesn't even support it. But sure, that'd be a good start.
I get. So what you think they need? What they need to do 50% in Q1?
Not a single insider buy, and I get it. Private company for 20 years, they have a liquid market that they can sell in. I'm not bashing them for that. They deserve to make a profit. At the same time, insider buying is a lot more bullish than insider selling. 2, it is trading at such a crazy valuation. And once again, you're talking about a company that on a per share basis, okay, in 2027 is only supposed to do 95 cents a share. It's trading at 90 times earnings after the current fall from 125. Okay.
Oh, yeah.
So you're telling me that you're going to spend $85 for a company that's going to generate less than $1 of earnings in 2027 when you could be buying Alphabet that for every share you buy, you're getting $11.82 of earnings at a forward multiple of 14.5 in 2027. It doesn't make any sense. And once again, it doesn't matter about the sectors they're in. $1 equals $1 of revenue, net income, gross profit, and 10% growth is 10% growth, no matter what the numbers are.
Hold on, I'm gonna let you finish. But Archer's down 25%.
Why do people care about this company,
dude?
What is this company?
They sell eVTOLs.
You can't even tell me what they sell.
No, they sell eVTOLs, the thing that goes up in the air and can take you from one location
to another. Get out of here.
Dude, so many people in the chat like care about Archer. And it's
why? Stop. I'm trying to help everybody. Stop. Can we bring what's the ticker?
Dude, they don't have any earnings.
HR?
You're not going to see any numbers. There's nothing.
What is this silly thing?
ACH.
$4 billion market cap?
They have $1 billion in cash. And they have a $6 billion backlog just to
so they have no revenue. They lose money.
Correct. People were this thing was $3 5 months ago. A lot of people bought it. It went to $10.
So they got $500 million in cash. So really think about this. Great business to be invested in. $500 billion in cash, and they lost $493 billion last year in operating income. That was their negative operating income. Now they have some subsidies or whatever, interest coming in. So they ended up only losing $448 billion. You have another year like that this year without diluting shareholders, they have $50 million in cash left.
That is true.
I mean, so why would people care about this?
Well, again, people bought it in November 2024 at $3, ran up to 10, and then people fell in love.
So sell it and get out of it. Buy a real company.
Well, a lot of people are attached to it, dude. I mean, I've talked to a lot of people. They just love the story.
Don't get attached to stocks.
Look, I agree. The reason I've never bought into it is because there's no earnings. And it's same thing with a lot of these names, like Oklo.
This
There's
is
no earnings.
another thing where you're going to need so much regulation to come through to make money for people to use it. Why would you? And this is another thing I get annoyed at. It was one thing for all of us to be invested in Palantir that did the homework at 7 and then in the teens and keep buying more. That's one thing because they were free cash flow positive. You had customer testimonies about what they did. We understood the technology and the ramifications of it. And you had the largest companies in the world showing off partnerships from Hyundai Heavy to Jacobs to Airbus to BP to the health systems. You had AIPCon. You don't have conferences where all these companies come to and showcase what they're doing. That's unheard of. Now, do I think Palantir is massively overvalued? Yes, but I certainly don't think it's worth 15. I think it is comfortably worth 30 to 40 a share.
Okay, but see, this is the question. You think it's worth 30 to 40. Do you actually think the market will take it down to 30 to 40?
I think it's going to be pretty hard because I think a lot of buying will come in around 50 if it gets there. I think a lot of buying will come in, but we haven't seen real resistance. The appreciation's been too sharp to really have to know anything because it was basically a straight line. You had some consolidation for about a 2 to 3 month period, 2-month period around the 80 level. It dipped and came back. So I would say right now the bottom is around 65. Like that's probably the number on the floor because you had around 67 at the end of November, came up, fell to 65, then went back up again. So that's probably the floor. But break 65, all hell's breaking loose. And remember, I kept saying it and nobody wanted to listen. It's not going to go up indefinitely.
Well, yeah. Look, I think people that have been owning the stock for a long time at 125 knew that it was getting extended and eventually something was going to happen. It happened just so quickly. The velocity of it was like within 24 hours, you know?
Yeah, but you got to remember, the amount of high frequency trading that's happening is insane.
Yeah, I agree.
It's insane. And that's another thing with the market. It's not just player versus player. Like this is high level, high frequency, and then a lot of stop losses and everything else.
So let's say Palantir does have that decline. I don't know if that's going to be a Palantir independent thing, given how much of an AI trade it's become. I feel like the whole market would take a nasty haircut if Palantir gets to $40.
Maybe.
No, I don't even think it's a maybe, dude. I think for Palantir at this point to go down 50%, either earnings would have to be just god awful, which I don't imagine that's happening, or the entire market falls 10%, at least 5%, right?
Maybe.
That's where I would disagree with you. I don't know if it independently can fall to 40 while the rest of the market holds up.
I'll tell you another company everybody should be watching right now. If it keeps going down, this thing gets to 250, this is a screaming buy. Salesforce. Screaming buy.
Why?
Why? Look at the numbers.
I mean, all I heard was Benioff complaining about Microsoft this morning. But
okay, that still doesn't matter. They are pumping revenue, growth top line, growth bottom line, just put up over $6 billion of net income, largest net income year they've ever had.
I don't hate Salesforce. I agree with you. The numbers are good.
Think about this. Can you bring up, you have Seeking Alpha?
Yeah.
Can you go to Salesforce and go to the cash flow statement, please? I could build a chart also. I'll build a chart, make it nice and pretty.
Yeah, do that. That'd be easier, actually.
Yeah. I will build a chart for everybody.
They were down 4% yesterday. Obviously, Agent Force is just getting into scale. But I think, again, if all these SaaS companies move up in unison, that also is a bucket Palantir's in, which makes it harder to independently go down. Tanner says, next time I see Steve, I'm going to kiss him.
Yeah, I promise you should not try that.
Yo, Steve stays with the strap, bro. Steve stays with the freaking strap. Amazon over Salesforce. I'd probably buy Amazon over Salesforce too. I would, dude. Long term, I'd rather own Amazon than Sales. That's a no-brainer. But it depends how bad Amazon gets in this environment. Okay, let me play a video while Steve's making this chart. Here's
the chart's done. I just don't know why it's not giving me all three bars. So yeah,
okay,
play whatever you need to play.
I'm still gonna play the video. This is Bryn Talkington, one of my favorite analysts, who is buying a stock that that I like, and she's explaining why she's buying more of this stock. And that stock is Robinhood. Here's what she had to say today.
Fundamental investor who's buying more Robinhood today.
Yeah.
Another one of the stocks that's right there front and center in the conversation.
Yeah, well, we talked about it, I guess, like a week and a half ago. And I said, if Robinhood comes down into the 40s, I'm going to buy it. I mean, it bounced right. I bought it at 45 when the market sold off earlier. It bounced right off the 50-day. I mean, Robinhood is not trading at a parabolic level. It has an E. And I just think this secular growth trend that you're having, Robinhood just cleaning the clocks of a lot of other, we'll say, custodians, just because their user interface is incredible. They're doing great things on IRA matching programs, a ton of education. And I think Vlad and them, as I've said before, we're watching them grow up. They have a ton of smart engineers. And so I think this was a really good opportunity to come in at, I think it was like 45.50, bounced off the 50-day. And look, it's already back at 51. And so I'm in this stock long term. And so I took the advantage to buy it. But I don't think you can even remotely compare a Robinhood to a Palantir. They're just two different businesses and the charts look incredibly different.
I gotta get Bryn on the show, bro. She loves Palantir and Robinhood. We gotta talk to her one day. All right, Steve, you can share.
Yep.
This chart. Yeah, Kramer did have an interview with Vlad 2 days ago as well. We watched that a couple days ago.
All right. So when you look at Salesforce's cash from operations and free cash flow they're producing, it is a straight line up. Look at the cash from operations went up by almost $3 billion year over year. Every year they generate more cash from operations, and it's accelerating. It may not be accelerating on a percentage basis, but it is accelerating on an actual numerical basis. And you look at the free cash flow. So $6 billion to $9.5 billion to $12.5 billion. I mean, why? That's not slowing down. It's not stopping. And it's trading at 20 times 2027 earnings. So if I was to filter it, it'd be trading almost as cheap as Meta and Nvidia. Like Walmart is more expensive than freaking Salesforce. Walmart has 24.5% growth. Salesforce is 29% growth. Like, what are we doing here?
So you'd buy Salesforce over Costco?
All day, every day. Twice on Sunday.
Yeah. Look, I don't disagree. I don't disagree with you. Which then begs the question, why does Costco trade at its valuation? Why do some of these stocks get their valuations? And I think that's been your whole point for the past hour. Which is
because people look at them as recessionary and they always need a reason to be. Look, what you know that I'm a pretty straight shooter, right? Was I not one of the only people saying that there's no recession in sight?
Yeah.
For years?
Yeah.
Was I one of the only people that was saying that an inverted yield curve did not mean that we were going into a recession?
Yeah, that's everyone thought that the inverted yield curve.
Every single person except for me, more or less, was saying that.
You're so humble. I love it.
No, but I'm just saying, like, I'm a pretty straight shooter. And if I get something wrong, I say that I get something wrong. But I was correct on those things. And I have not been correct on Costco. It keeps going up. And I don't understand why, because I don't think that there's a recession coming. And that's my point. This has been looked at as a recessionary proof company, but there's been no recession in sight.
Well, what if people do start losing their jobs? I mean, today we had 20,000 people lose their jobs more than expected, right? Like, what if that becomes a trend?
Look, you know my fears about the next 10 or 15 years. But until those fears really start to come true and we have GDP growth, there's not going to be a recession. But they are going to need to figure something out with AI and robotics, because I do think over the next 10 years, there is going to be so many industries that are impacted that the wealth gap is going to get crazier and there's going to be less people able to work. I don't think it's a good path we're going down.
So your thesis is robots will take away actual jobs.
Yes.
And that's when we have a recession.
And it may not just be humanoid robots. Don't forget, just having an arm that does things is a robotic apparatus. It doesn't have to be a humanoid. Most of Amazon's warehouses are robotic at this point. But there's going to be less of a reason to have additional humans around in a warehouse or other things in 10 years from now. And then you look at full self-driving, why are we not talking about the entire taxi industry, whether it's yellow cab, Uber, or Lyft, is going to be impacted? Why are we not talking about the entire trucking industry is going to be impacted? And then you have a couple of robots in the back to move everything instead of humans.
Are you sympathetic to AI will create more jobs than replace?
I don't believe it's going to create more jobs.
Why?
How can it possibly create more jobs?
You need people to manage the robots, control the robots, create the robots.
How many people do you need to manage robots? You need one-to-one supervision?
Probably not. Probably not.
I mean, really think about it. I mean, you know more about robots than I do, and pretty much 99.9% of the people out there. But if these things can work 23 hours a day, and then you have other robots that are able to replace the battery packs, and you don't even need humans for that, and you just need some supervisors to make sure everything's working correctly, where are we going to get one-to-one supervision, or where are we going to get a society where robots aren't displacing them? I mean, think about it. You have a lot of service industries, from gardeners, landscaping companies, snow removal, pool service. What happens when a robot can do all that?
Yeah, I mean, you're not wrong. Those are jobs that definitely don't exist after that.
You know, look, you have entire hospitality industries that have housekeeping, that have services for the rooms. What happens when all of that becomes robotic?
Do you think the government just taxes Tesla then? And they give
I don't know what the solution is. And I continue to say to this day, like Andrew Yang, or you don't like Andrew Yang, he was the only one in 2016 that was talking about this, and he was 100% correct. It was just, you didn't have Optimus or these other things, but he was talking about the advancements in technology, and something has to be done to protect humans. And I really do think, look, what I see with these software platforms, there are so many advancements in them. And now you got Zuckerberg talking about, think about this. Remember, it was learn to code. Remember the whole movement, learn to code?
Yeah. It's stupid.
Okay, well, why would you even want to learn to code now? It's a waste.
You can ask Grok to code for you.
Not to mention, Zuck's going to have AI in 2025 that can replace mid-level coders. He said it on the earnings call. Yeah. And then it's just going to get infinitely better, and eventually it's going to replace high-level coders. So tell me where all those high-end coding jobs are going to be. All those six-figure salaries for coding, multiple hundreds of thousands of dollars a year, in 5 to 10 years from now, you're going to try to convince me that those are still going to be there from Meta and Microsoft and those companies? You're going to have people that look at the final product or look at the timeline and do check-ins every day or every week. You're not going to need a team of 20. Maybe you need 2 people.
So do you think buying those tech stocks as an investor is the solution.
It's not the solution, but it is probably one of the best investments you can make right now. I don't know what the solution is, but this is a genie you can't put back in the bottle, because if we create regulation and stifle innovation, we will lose to our enemies. You're damned if you do, damned if you don't. You have to be on the forefront of this. We have to be in a winner in it. I am just not seeing a way, and I hope I'm wrong. I hope I'm wrong. I don't see a way where we are going to be able to create more jobs from AI and robots than the jobs that are lost.
Are you scared about China or Russia right now at all?
No, why?
Is it a factor in your mind when you're investing at all?
No, not at all. Zero.
Why not?
Once again, people get too fixated on things that are too hard to predict. Nobody knows what's going to happen. Put it in as a risk factor, and if that's going to derail your entire investment thesis, I don't know what to tell you. But am I worried about China or Russia when I'm investing in Alphabet or Amazon? No. Why would I be?
Apple, is this at an appropriate level? Is this undervalued? How are you thinking of this right now?
Yeah, I mean, I think everybody who's bet against Apple has never done well.
It's funny because it was up 2 days ago when everything was going red, and it's like it was the safety trade.
It's Apple.
It's Apple. That's correct.
Like, don't bet against Apple. I don't know what to tell you. Don't bet against it.
All right. I think that's it for us. This was a hell of a day, dude. I didn't expect 10% down on Nvidia.
I don't think anybody did.
I don't think anybody did, but nonetheless, that's what ended up happening. I think the takeaway here is that if you're really this scared of 2 weeks of volatility in February, then it's just like it's got to be one of those things where you're either too conditioned to see green or you're not used to actual volatility, because this is real volatility that is like healthy. Maybe not on Nvidia, that's a little weird, but on everything else that's flying like Archer, this volatility is like, yeah, there's no earnings.
Nobody wants to see their portfolio balance go down. But if you're shook about 2 weeks, I mean, I don't know what to tell you. Go buy the S&P.
Yeah. Yeah. Like, to dare to manage your own portfolio and have your own holdings, that is exciting, but that also comes with risk, and that also comes with responsibility. And that's okay. You're going to make mistakes. Everyone makes mistakes. But to cry about it, it's like, on the long term, if you're in the right companies, you just got to wait it out. And hopefully you don't need the liquidity right now. And if you're investing with money that you literally need tomorrow, that's also just not the best plan either.
Yeah. And I mean, look, there's a lot of good buys out there. And I think that too many people are just looking at big tech. You know, I don't think a lot of investors know what business development corporations are.
Yeah, no.
I don't think that people look at REITs and take them seriously, but there are some REITs that are really undervalued right now that pump out big income. You know, VC properties, for instance.
Yeah.
You know, go look at VC. Why gamble in the casino when you can own the casinos?
Well, that's another thing about this type of volatility. It forces you, I'm a perfect example. When I invested in a biotech that I thought was going to solve all the world's diseases, and it didn't, and I lost like 20 grand, it forces you to look at higher quality companies. So if you're in some shitty stocks right now and you feel bad about it, you start looking at something that gives you a 5% dividend, which is not going to go up 30%, but it's a bit more safer. And you just like it forces you to broaden the intellectual horizon around stocks you look at, which is not a bad thing.
You know, you look at NNN, it's phenomenal. There's a lot of REITs out there that are really solid. Simon Property Group, I remember when people were trying to convince me that there were going to be no more malls. I mean, really?
Okay, I'm not going to lie, though. Malls are dead, bro. Like, I went to the mall the other day. Like,
they are
malls
not
are
dead.
so dead. No, dude, there's no one at the mall. Like,
what are you talking? I was just at the mall. It was packed.
When was this happening?
Over the week, Friday.
Was this like in the city?
No. Google Roosevelt Field Mall.
No, I'm gonna do it through Google.
I am not talking about little Class C and Class B malls. I'm talking about the creme de la creme, the big malls. They are not. They're the furthest thing from dead.
At my local malls, bro, I'm not saying they're dead, but they're not packed. Like,
Bring up Roosevelt Field Mall on the screen.
This one?
Yeah, try to get like an aerial view or something, and just to see how big this freaking thing is. So the reason malls are not dead is because yes, e-commerce is getting bigger, but it's still only 20% of all retail. And malls are more than just shopping. It's experiences, movie theaters, dining, mini golf, a lot of different things. People want human connection. They want something to do. Class A malls are fine. And then you bring up a chart of Simon Property Group. It's gone from like 60 back to 170.
Yeah, I think the stock itself, of what controls malls, is not necessarily under danger, but the long term, I would not want to be long term invested in malls. Is my point.
And that's the
And
difference between me and you.
Well, that's a REIT that I'm a bit more skeptical. Like New York property, like a commercial property, that I like. SLG.
Okay, so over the past 3 years, okay, Simon Property Group has done 5.3 billion, 5.65 billion, and 5.93 billion in revenue. Keeps growing. Their real estate, I think, is almost 99% rented. Their base, actually, I have all the data. Hold on. And then we can wrap. But let me
see, this is good. This is what these are the types of companies
let me share my
you
screen.
can look at that are different than some.
So I wrote this on February 5th, so it's not even a month old. So this is all up-to-date data. And look, I've been bullish on Simon the whole time. So look at this. Their base minimum rent per square foot keeps going up. And their occupancy rate is 96.5%. It's the highest it's been since pre-COVID. So
that makes sense.
you
Look,
can't tell me that malls are dead when Simon Property Group, which is the biggest Class A mall REIT, has its occupancy rate and its base minimum rent going up.
That's a good
and
point.
All their contracts are tied to annualized fixed escalators. And the dividend, they had to cut it during the pandemic, but it is back to where it was, and they kept growing it. I mean, this is a phenomenally run company. I think the easy money's made on it, but people who bought it are doing very well on it. And it was the same thing with commercial real estate with SL Green and Vornado.
Steve Seeking Alpha, I'll put it right here in the chat. One question someone wanted me to ask you as well in the market open was, how many positions do you have?
I mean, real positions or fake positions?
Real.
Text me what you consider a real position.
Like,
don't say the number. Text me.
Okay. I feel like you're still going to have a lot of them.
Probably.
Okay, just text you. At least that much in the position.
Too many to say.
Dude, you are an ETF. You're like you're your own index fund at this point.
Yeah, I mean, listen, that article series that I write is a perfect example of me being my own ETF, because this will be the last thing I'll share. So I actually think this is the funnest thing that I write every week. So for the past 208 weeks, I put $100 into an account and invested it. And my investment rules are: mitigate risk is my number one, generating reoccurring revenue income. 2, capital appreciation is a side project. Don't care about it. Okay. Last week, the S&P declined by 1.77% and the NASDAQ fell by 2.74%. And my account only went down by 0.79%. I think I have 90 something positions in this account. And when you look at the history of this, I am doing pretty well on invested income. And something that's really interesting is, let's see. I think this chart is really interesting. So my top 10 positions, when you look at this, they're up 33% ROI, But the dividend income generated has generated 16% of the positions already.
Wow.
And everything just keeps reinvesting. And then you look at the actual growth of the dividend income. I mean, this started out in week one. I think it was doing like $7.40 or something like that after my first investments. And I think the first three investments I made were Altria Group, AT&T, and Starwood. And now it's doing 2017.65. And the dividend snowball is really starting to come to fruition. And I'm planning on continuing to write this series for a long time. But the fact that I was able to mitigate risk through all the positions, I mean, you look at this is all the positions. Everything in the green is generating at least one share per year from their reinvesting their dividends. And when the S&P was down 1.77%, this account was down less than 1% because of the risk mitigation through diversification.
And anyone can follow this journey publicly.
Yeah. I document every trade. I've had to exit 4 positions because they cut their dividends, eliminated them. I sold out. I show every trade every week, go through all the data. There's a lot of data in this. Anybody can follow. It's actually the funnest thing I write every week.
Yeah. All right. Cool stuff, Steve. Thanks for joining and providing some commentary on a day like this. I imagine if Nvidia gaps down to 115, you're probably going to be buying some more.
Hold on a sec. Did somebody said I'm in? Yeah, I sold WBA. It's not in here anymore. Unless I didn't take it out. No, it's not here.
Yeah, you sold Walgreens a long time ago.
I sold Walgreens the other week and took it out of the spreadsheet. I think I sold it 2 weeks ago. Somebody said in here, you sold, you're in WBA. How's that green? It's not. I'm not in it.
If Nvidia goes to 110, are you selling Square and buying Nvidia?
I kind of want to make my money back in Square and not take a loss before I sell it. I'm planning on doubling down on Square and buying back some of the money I lost. But what I will be doing if Nvidia gets to 110, I will be buying back my covered calls on SL Green and selling out of my entire position of SL Green.
Wow.
And I will be buying Nvidia with it.
All right. That'd be a pretty SLG has been a good winner for you. So that would be a big rotation. All right. Cool stuff. Thank you, everybody. Steve's Twitter, I'm putting in the chat. If you want to follow him on Seeking Alpha, he puts out a couple articles every single week. I think it's the best content on that platform. You can check him out right there. And yeah, sucky day, but it is what it is. You have some of these days in the market, and hopefully we get a rebound on Nvidia later this week.
Yeah, you can't look at this every 5 minutes.
No, 100%. And tomorrow could be nasty with PCE, and Nvidia could get sold off even more. But I think over the coming months, we have to see what the narrative ends up turning out to be. All right. Thank you, everybody. Appreciate you. We will see you back tomorrow. Tomorrow's Friday on the Market Open. Bye, everyone.
Later, everyone.